Nvidia just had earnings, and while I was skeptical from a technical standpoint, fundamentally this looks pretty damn good. We had 78% beat on revenue year over year, 80% net income year over year, EPS beat 0.89 cents to 0.84 cents, gross margin 73%, still solid, down about 3% year over year. Could be a little bit as to why the stock is sitting sideways after hours. Data centers are booming. Guidance was very, very strong, which was something that we were looking at. AI compute demand could be 100 times higher. And on top of that, they're looking at about $43 billion, which is absolutely massive. And for those of you who don't run a company, the idea that this company is still growing at this size, at this pace, is honestly astonishing and very impressive. Now, the only red flags that I honestly saw was the 11% down graphics card sales year over year, but it's not really that important. And the fact that growth is slowing, but you have to understand, like we just said, when a company gets bigger and bigger, the percentage of growth is going to slow just because of the magnitude of the company. Now, if we look at Nvidia, there's still a lot of things that I don't like on this bigger time frame, such as the red BX trender on the monthly. The last time that this happened was 2021 to 2022 when the stock sold off pretty aggressively, as well as back here from 2018 to 2019 when we sat sideways. There was a time back in March of 2021 when the monthly BX flipped red for only 1 month and then was followed by a massive breakout of nearly 200%. At this point, I still don't have a position, but I will become bullish if we're able to break over $140. This is going to be our pivot point, or basically what has to occur in order for us to become bullish and subsequently take a position. The reason that this is such an important level is because as of recent, price has just been continuing to make lower highs each and every single time we bounce. And that's also been followed up by lower lows. This means that we are in short-term bearish structure. And in order for that structure to actually shift, we have to take out our most previous high, in this case at $140. If that were to happen, this is where structure would break and we would no longer be making lower highs, but now higher highs. And this is where price could creep back up into that $150 level and then eventually look to break out of this potential liquidity zone that we've had setting up for the past couple of months. But once again, in order for that to be the case, we need price to take out $140. Until then, we hold off on taking any positions. If you want access to all the indicators that you see here, as well as my step-by-step checklist on what I look for to get in and out of trades, go check out our free course library. The link is in the description. I recommend starting with the Elite Traders Playbook, as well as the Smart Money Mastery course. And if you want to get access to all my real-time trade alerts, as well as all of our trading bots, and custom indicators, you can join our Discord community. The link will be in the description. Thank you for the support, and I'll see you tomorrow.